Hey, it's Alay in this episode 412 of the Orange Pill Investor. And fresh off the Bitcoin conference, uh, it was kind of like Strategy World, but on crack. I mean, there was just so many people there. And all of the hangouts, got to eat, drink, hang out with people, like minded people. And just feels good. So, would definitely recommend getting out to some of this stuff. I gotta I gotta admit, I'm a little annoyed with the shitcoinery at this particular conference. Um, and I don't know, doing a little bit of research on David Bailey, I guess that's to be expected. So hopefully somebody with a pure heart and mind will will start something as big and and provide an alternative. But anyway, being in Vegas, it was freaking awesome. And I already miss I already miss everybody. So thanks everybody. What's up, Howard? What's up, Richard? Kanal, what's going on, man? It was good to see you, brother. Um, the shit coinery. Yeah. So, the title of this one, I I I wrote it out and I almost just took a screenshot of it and then didn't put it that way. I was like, maybe I shouldn't. And then I just started laughing so hard, and I kind of felt like if I didn't publish it, I'd feel kind of like a pussy. So anyway, went ahead and plowed forward with it, so hopefully I don't get canceled, but, STRD, when I saw it, I was like, "Oh, shit, here we go again," and I was waiting for some kind of amazing, weirdness to it, and I'm like, "Wait a minute, it's the same thing as Strife, but, like, no guarantees." I'm like, "Why?" In my head, I'm thinking, "Okay, well, you're only gonna come out with new products that are better than the old one." But that doesn't make any sense for a number of reasons. It would it's not literally like this, but it was kind of like the people who got okey doked with Trump coin, and they thought, "Oh, yeah, this is gonna be a cool thing," and then they kinda got rugged with Melania coin 'cause they just came right behind it and were like, "Okay, we're just shitcoining now," and, it was just kinda obvious that it was money grab. But in this scenario, it's kinda like, well, why would you intentionally come out with an inferior product? And I guess if I go to the car analogy, it's really no different than like, not everybody can afford the luxury model. And some people are willing to take more risk for more reward. But at first glance, it doesn't make sense. It's like, well, wait a minute, the reward is the same. But my assumption is that STRD will trade at a discount to STRF. It remains to be seen how the market's going to price it. But what is STRF right now? A little over 100. Yeah. So Strife is trading at 106, and if I understand it correctly, Strife kind of has a floor and a ceiling. So Peter Dwan was asking, like, like why isn't the total return on Strife the share price plus the dividend? And that's true, but it seems like Strife will just trade within some kind of range because if Strife was to get up to like $200 a share, then the dividend is not very attractive anymore, not compared to the people who got in at 100. So those people are only going to be getting 5% because you'd still be getting $10 a share, but you paid twice as much for your shares. So Strife kind of has a ceiling. At some point, the market is just going to be like, this doesn't make any sense. And maybe it's whatever the treasury bills are or something, right? If Strife gets so expensive that you could just buy US treasuries and get the same returns, that, maybe that's the ceiling. It could be something else, but It also kind of has a floor because if Strife were to get sold off, even if you assume that the ATM, maybe they just hammered the ATM with just reckless abandon, and they're like, we don't even give a fuck if it knocks the share price down, right? They don't use the little trading algorithms that they supposedly use, and they hammered even if they were able to hammer Strife down to like $50 a share. Well, now you're getting $10 a share off of $50 a share, like 20% frickin' annual returns. So people would just flood into it. So it looks to me like Strife has some kind of narrow trading band where if it goes too low, it becomes too attractive. And if it gets too high, it becomes unattractive. And you might be able to trade in and out of it or something as it goes slightly up and slightly down. But it's basically for people who want the safety of the senior preferred because this is at the top of the debt structure. Is it debt structure? Yeah, if they get liquidated or whatever, the Strife holders get paid first, from what I understand. And then here comes STRD, which is more risky, and because they don't have to pay the dividend. I read that so many times and sitting in the airport waiting for my flight. I'm like you like okay, you're in here. We're gonna give you this dividend, but only if we decide to give it to you. Like we can just vote not to, which is obviously uh, a huge flexibility for strategy because if they're in the middle of a bear market, times get tough, and they're like, you know what, we can't afford to pay this damn dividend. Well, Strife, it just starts to compound or just pile up, right? They got to pay that damn dividend eventually. I can't remember how long they can postpone it, but if they wait, you just have to. You're just kind of kicking the can down the road. But with STRD, they can just be like, you know what, we can't afford it. We're not going to do it. And then anybody holding STRD is kind of asked out. So it should trade as at a discount. So I don't know what that discount's going to be. Is it going to be 10% cheaper than Strife, 20% cheaper than Strife? There's going to be how did Dylan Leclerc? I think he called it almost kind of like the yield curve. They're creating a yield curve. And it's going to be very interesting to see how much of a discount people think the threat of not getting paid the $10 a share. Well, and actually, they didn't even write $10 a share. That was it got me a little confused because I think they did write it as a percentage this time, but maybe as a percentage of the liquidation price. And so at first I thought, oh, if STRD trades up to 150, they'll pay 10% off of that. But I had to read it again, and from what I understand, I just read it wrong, and it's literally the 10%, but based on the liquidation price. So I think it isn't technically an identical dividend to Strife, but it should trade at a discount. Um, and one of the cool conversations that we had at the Bitcoin conference was literally, we were talking about uh, the preferreds and also kind of like trying to steelman the bear case. And one of the things that I'm bullish about the preferred, or what I was bullish about the preferreds about, and if they didn't follow through on it, would probably have made me rethink owning strategy in the first place. And that would be that if strategy ever traded below 1x MNAV, if they don't hammer the preferred ATMs and buy back their own stock, because that would be accretive to Bitcoin per share, if they didn't do that, I'd have to rethink my strategy position. And lo and behold, I was joking. I was like, maybe they were like bugging our, they were bugging all of the restaurants and the bars and listening to our conversations because it wasn't long after we had a couple of those conversations that they're releasing this. And I was, half kidding, but um, Tim Kotzman actually interviewed Fong Lee months ago, And if we were reading between the lines, we probably could have seen this coming. So I'm going to credit Tim actually with the scoop. Um, and the way that Tim said, "Hey, would you guys be ever consider buying the stock back?" And he said, yes, but we'd have to, we wouldn't sell Bitcoin to do it, because there was a little bit of X rumblings. Like, look, if they're trading below 1x MNAV, they should sell their Bitcoin to buy strategy back because it's like it would be I don't know, reverse accretive or something. Instead of accretive dilution, I guess it would be a accretive accretion, which totally makes sense. But they've already painted themselves in the corner that they'll never sell the Bitcoin. So this is kind of like the next best thing because you can either buy Bitcoin or strategy, like all of us. We're all in the same kind of situation. And whatever you buy, you're foregoing the opportunity cost of buying the other thing. And so really, if strategy hits the ATM on Strife or Strike or or now Stride, they're sitting in fiat and they can do one of two things with it. They can buy Bitcoin or they could buy their own stock back. And to me, it's a distinction without a difference, right? They can't literally sell their Bitcoin because they've already said they never will. But if you could buy Bitcoin with it and you don't, and you buy something else, just admit that you sold the Bitcoin for the other thing. Like the opportunity of cost of doing something is is foregoing the benefits of anything else that you could do. So it's kind of a way of tap dancing around not selling their Bitcoin to buy their own shares back. But, you might as well just kind of admit that that's what you're doing because you're not buying Bitcoin with it, which is what you're supposed to be doing with all the dirty fiat. But I'm glad they're doing it because if they didn't, um, it would just you could even make an argument that if strategy is trading below 1x MNAV and you don't buy the stock back, if you if you hit this ATM and you bought Bitcoin, which wouldn't increase your Bitcoin per share, then that would be like you would basically be violating your fiduciary responsibility to the shareholders, right? You're supposed to do whatever you can to return, return a higher stock price to the common shareholders. And buying your stock back at less than 1x MNAV would absolutely do that. So this little bullshit lawsuit that they got, I don't think means much of anything. I read the press release, but if during the bear market or whatever strategy was trading below 1x MNAV and they continued to hammer the ATM and bought Bitcoin instead of their shares, yeah, um, I might put my name down in the lawsuit too. So I was super psyched when they did this. It's absolutely the right thing to do, in my opinion, for the common stock shareholders. And it's pretty cool that they've been thinking about it for a while. So it's also kind of nice to be able to shut the ATM bears up a little bit because if they're reducing the common stock ATM, there's less for them to bitch about. And hitting the ATM on these preferreds is just accretive to the common stock shareholders. So the bears are, probably just like to complain. So this is like kind of like ruining their day, and they got to find something else to complain about. But yeah, if you can't afford Strife or you're willing to take a little bit of extra risk, I think people were calling this like junk grade. This is like the junk grade version instead of the crown jewel as they listed it in the slide deck. Yeah, if you can buy STRD at some discount to Strife, get a little bit extra yield, and if you're willing to take that risk that times might get tough and they don't they decide not to pay, then, then yeah, that could be attractive to some people. So, gonna be fun, gonna be interesting. Let's check the chats, and then I haven't traded for a week since I took it's kind of a vacation, but, it was fucking exhausting too. I mean, we were I I didn't even go to any of the conference things until Thursday. It's kinda hilarious. Tuesday morning, I showed up like an hour early, and the line was already kind of filling up to watch JD Vance, and I kinda, like, didn't care, like, I didn't wanna see him, but at the same time, I was there for the conference, so I'm like, "Okay, this is what I'm supposed to do, I'm supposed to go to conferences," and I saw just people piling in behind me, and I'm like, "I'm an hour early for this thing. Like, do I really wanna just stand here for an hour just to be closer to the stage?" So I left and went and got breakfast and had steak and eggs instead and just skipped the whole fucking thing. Um, I don't know how much of this I wanna say, so I'm just gonna hint at it. Um, the Vance one obviously had increased security. So it was the only event that I'm aware of that had magnetrons, basically, metal detectors enforcing uh, that that peaceful people disarm themselves and put them at the mercy of whatever kind of security they had available. So that rubbed me a little bit of the wrong way too, and so that was kind of like the tiebreaker on not attending that event. And as far as I can tell, that none of the other events had had metal detection, and I'll just leave it at that. Um, Kaidason. I think I can speak for everyone. So, oh, no more vacations for you. Sorry, not sorry. Yeah, man. I was like, should I bring my laptop? Dude, face. Welcome back. Appreciate it. Howard, this is a measure of how stupid TradFi is. I bet they came to him and said, "We have much more money for junk stuff, and your strife rate is falling. We think it's too high quality. Can we have some junk?" Yeah, yeah. They're like, "We need some junk," and Strategy was like, "All right, hold my beer. I got some junk for you." Um, Hermes Lux. I got corrected on my pronunciation, so now I'm tempted to just mispronounce it. We were going to the little high end stores, and somebody was asking or giving me directions or something, and he's like, "Oh yeah, Hermes is around the corner." And I was tempted to get one of their orange ties, but so far my orange tie off Amazon is serving its purpose, so I ended up not doing it. But right after he said Hermes, I was like, "Oh," I said something about Hermes, and I was like, "Yeah, I'm probably just outing myself as a uncultured swine or whatever," but it is what it is. Let's see. Dude Face says, "I understand in the strife and the convertible notes are a little too good for the market. So this is now a preferred that they don't mind ATMing with a better return for the primary shareholders." Yeah, and it's yeah, I almost forgot the car analogy. So thanks for reminding me. It's almost kind of like it's almost kind of like when it's the when you don't have multiple products, you don't know how good or bad it is. And like, okay, well, let me come out with something worse so that we can distinguish how good this one is. And even like a Tesla will be very hush hush on like the Model Y refresh or something like that, or even like the fuck? Um, Even like the 25K vehicle that they're gonna come out with and the robotaxi and all that stuff, you don't wanna, like, let the cat out of the bag too soon because then people will be like, "You know what? If I can get nearly the same car for the same price as a Model Y, I'll just wait and spend 25 grand instead of 35 or 40." So, I don't know if they should have come out with STRD first or STRF first, but there's gonna be a model, an affordable model for every financial class, I guess. What's up, Dr. Van? Release of STRD, they are almost signaling that Strife is too cheap. Signaling that Strife is too cheap. So do you think STRD will come in and push Strife up? I was just assuming that STRD would trade at a discount, like at like, I don't know, 10% discount to Strife or something. Uh, Michael, what do you think the band of strike is? I've been wanting to start a position, but don't want to buy the top. Yeah, strike is even tougher for me to. Well, I don't do valuations and I don't do price targets, so I probably shouldn't even be talking about this at all. So strike is priced the same? That can't be. That can't be. 106 and 106. Strife and strike are priced identically. That's crazy. And maybe that's why they need an STRD because if the two products are too dissimilar to really be able to know. Huh. I just assumed that Strike would be trading at around 100, and then maybe STRD would come in around, um, I don't know, 95 or something. But Strike and Strife are trading at the same. So you're getting a higher dividend on Strife, but you get the conversion option on Strike. Yeah, Strike might be trading at a little bit of a premium because people are just licking their lips. Like if MSTR goes to 2,000 and now they can, but even then, if you buy a Strike at 100 and strategy goes to 2,000 and you get, let's say you get 10 shares for $1,000, and now you can trade in your 10 to 1 and get one share at 2K strategy. You'd have turned your 1K into 2K, so you doubled your money, but you can just buy strategy itself at 400 a share and you'd get a 5x return. But you're collecting interest while you wait for it to happen. So you're going to collect interest, but possibly get a 2x. Yeah, I don't know. Um, I'm still not excited about any of the preferreds personally, but I'm a volatility whore. So like, um, I wouldn't even consider getting into any of these products until strategy hit like $1,000 a share. If we get another, if we get another November, and within short order, like a month or two, right? In 8 weeks, if we go from 4x the bottom, so if we hit 1K in short order, and I'm like, you know what, November, I didn't take profits properly like I should have. And let's just say I liquidated all of my long calls or something, right? Strategy hits $1,000 a share. I just unload all of my leverage and I'm like, what am I going to do with all this fiat? And if I was tempted to wait for strategy to maybe hit resistance and then consolidate back around 500 a share or something, I might, instead of sitting in cash, I might sit in a preferred But would that make sense? If strategy pumps to $1,000 a share, what would happen to Strike's price? Because Strike's price isn't going to go anywhere. It might go up 10% or something, but Stripe's not going to like go up 2, 3x. I wouldn't think. But Strike, it's gonna be weird because now they've got 3 different levers they can pull. If Strife gets too high and they can just hammer that ATM. If Strike gets too high and they don't want people, or excuse me, I guess if Strike gets too high, they could hammer the ATM on it as well, as long as they don't push it down to where it's like a 10 to 1 and people are going to be forced to convert. They could let Strike run, but yeah, it's all a little bit too much for me to be able to comprehend. So that was a long ass way of saying I don't really know. Buying the top. So what is Strike traded around since inception? So it came in like 80. So it's been as low as 80. And initial highs was 100. And now it's pushing 106. Is it almost is it almost pacing Bitcoin? In February, what was Bitcoin trading at? No, Bitcoin's at 98. I was gonna laugh my ass off if Bitcoin was around 80, 84 at that time. That was but it just caught my eye that Bitcoin's trading at 106 and Strike is also trading at 106. Um yeah, I don't know. This product is so new. It's hard for me to tell. So yeah, unfortunately I have no uh well, I couldn't give you advice anyway, but I don't even think I can give you enough advice to tell you how to even advise you how to think about it, let alone make a decision. Steven, Strife has a clause that if the dividend is missed, then the dividend will raise the dividend by 1 percentage point, right? Yeah, something like that. In the earnings call, Saylor said 103% returns selling calls 30 days, ATM just rolling them. Could this be worth trying at some point using a tax advantaged account? So I actually quoted him as saying that in my options section that I presented at Strategy World, and I'm assuming it's recorded, so I may have to wait until that's published. We were running out of time, so I kind of had to rush it as well. So I'll probably do a full length version either on my channel or on a segment that we may start adding for MSTR True North. Obviously, we've got the regular Wednesdays from 10 to midnight, but we may add a segment called like True North Now or something. And so these could come out, during the day, any day of the week, and it could be any topic that anybody in the group cares about. And so I may do that Strategy World options talk again, and I'll do the longer version. And since I won't have a time limit, I can really make it as long as I want. So to answer your question, He is absolutely correct, right? However, this is why I don't take options advice from Sailor is because that's not really the most mechanically advantageous way to do it. So let's just go out 30 days. Oh, look at that. 30 days exactly. And if you sell a covered call, you can collect basically let's just round this to 2,500 bucks. And I don't know how far back they back tested it, maybe since they adopted the strategy. And I don't know if they back tested it like you're just gonna hold this till, for the whole 30 days, and then you roll it out another 30 days. But you could do this, 12 times a year, right? And you would get 12 times 25, so that's 300,000. Is that right? Oh, 30,000. What am I thinking? Oh, yeah, so this is just one. Yeah, sorry, for one option. Um, so that's not quite 103%. So I'm assuming their back test um, includes low IV and high IV environments, because if even though the premiums are actually very good right now, it's kind of crazy that they're this good even in a low IV environment. And this is marketchameleon.com. You can get a free account. They don't pay me. I've just been using this for like 4 years. And the premiums back here in November were insanely high. So I'm assuming they're averaging the premiums that you can get, you can collect now where IV is very low. It averages out with some of these that are very high. But at current prices, you could make 30 grand on basically a $39,000 investment. So divided by 39,000. So at current IV, if that continued throughout the year, you wouldn't get 103%, you'd only get 77%. But the reason that I wouldn't go out to at the money 30 days is because the theta acceleration curve is different for at the money strikes compared to out of the money strikes. When I go out 30, 45 days, I don't sell at the money. I'll sell out of the money, anywhere up here, point 0.2, point 0.3, point whatever delta. Hermes Lux likes the. I almost kind of feel dumb saying it right. I feel like I should just be saying it wrong and stay true to my roots. So, Hermes likes the 5, probably like the 10 deltas, right? And the reason is because the theta acceleration curve is different for out of the money options versus at the money options. And around 45 days to expiration, the theta acceleration curve really begins to pick up speed. So the rate of change of theta really starts to accelerate at 45 days. And that doesn't stop after 2 to 3 weeks, but Tasty Trade recommends rolling them at around, 2 to 3 weeks, or leaving them on for 2 to 3 weeks, which would probably be around here, right? You sell here, and then you'd either roll here or here. And the reason is because if you allow it to get closer and closer and closer to expiration, your gamma risk increases. So the price of that option is going to fluctuate wildly based on the share prices. So you can capture a good portion of the premium in this 2 to 3 week period without exposing yourself to increased, at least in their view, unacceptable gamma risk. If and let's just bookmark this, right? You can get 2,400 bucks, 2,500 bucks at the money 30 days out. So if I'm just going to look at weekly. If looking at the weekly meant that you would get an equal amount per week, then each week you should get 600 bucks. But you will see that there are diminishing returns for every week that you go beyond one. So, and this is only 3 days, right? Because it's Tuesday. Yeah, so this isn't even a full week, but you can get more than 25% of that 30-day premium in 3 days. If I go out 10 days, it's basically doubling, but it's going from 3 days to 10. And when I go from 10 to 17, it only goes up 400. It went from 12 to 16. And you're going to continue to see diminishing returns every time you add a week. So if you can get, 600-700 bucks for 1 week, going out 2 weeks isn't going to give you 12 or 1400. It's going to have diminishing returns every time you add a week. Now it went from 12 to 16 to 20. So instead of going up 600 bucks a week, now it's only going up like 400 bucks a week. And then by the time you get out to, here, the at the money premiums. Well, I mean, it's happening for every strike, but so if I'm going to be very aggressive and I'm just going to sell at the money, I would just do one weeklies, right? If I'm really just going to throw all my upside away, which I'm I'm definitely not recommending, because if strategy if strategy runs to $1,000 a share in short order, you might be kicking yourself for picking up an extra 500,000 bucks and missing out on what, $60,000 of upside. Um, unless the implied vol chart looks like November, right? If you rode the stock all the way up from 100 to 500, 4 or 500, then sell premium at these insane valuations, that might make more sense. But at a very low IV environment like we have right now, that doesn't seem. Yeah, Strategy's IV rank is 10. That means out of the last year, this is like the 10th highest day out of 365 days. So extremely low IV environment. All right. So I went all around the world to get to that, but the bottom line is the 30-day at the monies that he mentioned are not mechanically optimal. If I sell 30 to 45 days, I'm going to sell the out of the money ones. And if I'm just going to, wipe my ass on the upside and just throw it all away, I might as well do it weekly and get the maximum amount of premium, squeeze out the maximum amount of premium that I can. Because if I can get 700 a week for 4 weeks, that's $2,800 instead of $2,400. If that makes sense. So I'm not saying you should do it, but if you're gonna do it, you can get more premium at the money for weeklies. And you can clearly see from my positions that when I go out, 30 days, I'm out of the money. I have been known to sell at the monies, but I generally just do that 1 week out. Um, and yeah, and you've got a 50-50 chance, right? So let's look at the delta on this. You wanna have accurate expectations too. So this is a 48 delta, meaning it's basically a coin flip. You got a 50% chance that this will be in the money or out of the money. If it's out of the money, then you just keep all the premium and you keep your shares. But, you know, heads you win, tails you lose. So every other week you should get wrecked. Now, you don't know how badly you're gonna get wrecked though. The price could go to 392 and you only have to pay 250 bucks to roll it. Or it could go to 450 and you gotta pay like $7,500 a contract to not lose your shares. So just keep that in mind. Everything is a trade-off. And for me, it's not necessarily the solution that I've kind of come to is it's not necessarily even about what strikes I pick in the days to expiration. As long as I'm under 45 days, I think it's all good. Under 60 really is probably fair game. But I sold 15 covered calls and got paid 1,300 a pop. Then I turn around and after I pay my bills, I'll just buy more shares or whoops, or I'll buy some more of these long calls if I'm still bullish. And then accumulate uncovered leveraged positions. That's kind of been my strategy over the last 6 to 9 months. Um, but yeah, if all I owned was 1,500 shares, I think it would be very, very risky on missing out on upside to sell, like, at the money covered calls. Unless you're plowing every spare cent into, longs. However, his math does check out, right? So even at these low IV environments, just throwing away all of your upside would still give you 76% returns for the year at current prices. The lawsuit is just a lawyer's phishing scheme to extract money from potential plaintiffs. Predatory BS. I wouldn't be worried about it. They've had previous suits attempted and went nowhere. I agree. So, Doc, again, let's see. Think Strife and Strike will reprice to 120 pretty easily. Yeah, really. So at 120, does that push them down to more like an 8%? Yeah, I mean, 8% dividends is still pretty good. Strike 100 equals strategy 1,000 plus 8% to weight. Yeah, it's it's hard to argue with. The preferreds are interesting if you want some cash stability, so no one in this chat give me the vol. Yeah, exactly. Like, um, yeah, if we see another November pump and we pump to like 1,000 a share, I could be talked into slamming it all into Strife, or not all, like taking profits on all my leverage and slamming the rest into Strife. But I don't know. It still seems a little boring. I'll probably just I'll probably just do what I had been planning to do and plow all those profits into Tesla. So we'll see. Howard says Strife ceiling is whatever the rate of monetary debasement is for those buying it, plus whatever they want for extra risk. Yeah. Yeah, I guess it depends on how much they print. All right, so I'm going to minimize this. Let's see if there's anything I got to do. Because one of the benefits of selling covered calls is I didn't want to be staring at my screen, so I didn't sell any weeklies, right? I didn't want to be sitting in Vegas staring at my my phone or my computer. So I just went out 45 days and I didn't have to worry about it. All right, so these have been open for 11 days. I generally like to roll them when they're at least 50% below what I paid for them. So I could, before we had this little pump right here, I probably was ready to roll these. So maybe I'll wait another week, even though it is getting kind of close. The one thing that I forgot to do is I was actually going to sell some covered calls against my longs in kind of like a ratio spread. I got away with it the week before, but then before I shut down the video, I actually forgot to do it. So now that the price is kind of back up, I'm tempted to add another couple covered calls here. But we'll see. Let me see what else I got to do here. Breaking even on the Decembers. Making a little bit of money on the Septembers. I will hold these for another 18 days until July. And win or lose, I will roll these out to December. And taking in the shorts big time here, breaking even on the 20s, on the, the Decembers. All right, so the Tesla covered call, it's only 17 days left. So normally I would roll this. But in general, when I sell a covered call, I try not to panic roll. And so if I roll this now, I would have to pay for all the intrinsic and extrinsic value. So I usually check to see if this is worth hanging on to or not. And since it's in the money, I can't just look at the price and tell. I have to subtract out all the intrinsic value. The intrinsic value is the difference between the share price and the strike. So that's 42. Basically 352 minus 310, so 42. If I subtract that from 46, that leaves me with $400 worth of extrinsic value. So if I hold on to this thing for 17 more days, I can extract that last 400 bucks. So I've collected 1100 of the 1500 that I sold, and it took 26 days to do that. That's about 300 a week. So do I want to hold on to this particular option for another 17 days just to collect the last 400? I don't think so. So this is going to be prime, like ready to roll, prime material, like ready to roll, I think. So I'm going to go ahead and roll it, but I don't know that I will be able to roll it for a credit. I go back out to 45. So if I roll it, if I roll it to the 310 again, hoping that the price will come down, I absolutely could. But let's go. I'm going to try to go to at least the expected move or close to it. So I'll go to the 400 strike. Now this is going to cost me $3,000 to roll. But I'm still bullish on Tesla, so I don't mind holding this position. If I wanted to just take my profits and go home, I could sell the long call, which is the collateral that I'm using to sell the covered call against, and I could have taken my basically $9,000 profit, subtracted the 3 grand, and pocketed the 6. But I think what I would rather do is just go ahead and what's the delta on this thing? Delta on this is getting pretty high. I could roll this up as well, but I'm tempted to try to hold this for at least 365 days and get taxed at long-term cap gains. So I'll go ahead and take like a triple, 3x profit on one of these. And that should get me a little bit closer. So yeah, I got to come up with another grand worth of profits somewhere so that I'm not using margin. I can either sell shares or sell a covered call or two. So maybe I will add how many would I have to sell? I could sell 2 at the money. That would give me 1,400 bucks. All right, no margin usage. And unfortunately, my net theta is still negative. It's barely negative, but this doesn't even really qualify as an option seller's account because I have so many longs. But it's close enough for government work. All right, I think I'm good there. Oh yeah, let's take a look at the covered call ETFs. So I had 1,833 shares of IMST. They paid the dividend. They paid $7 a share, I believe. And I had 18, so I think they paid me like 12 grand or something. And then since I have a drip set up, they immediately purchased some more shares. So now I've got 2099 shares. I think I'm still winning this. I should have checked before the call, but I think I'm still up a little bit. But of course, Misty is about to pay dividends again pretty soon. So it's kind of like it's kind of like one step forward, two steps back, trying to stay ahead of these guys because now they're each paying dividends like a couple of weeks apart. So I don't get a breather against these guys. All right. The joint account, I will probably I'll probably stop covering this one. So don't be surprised if you see that. I'm probably gonna have to do a little bit of switcheroo. I'm gonna have to take some positions out of the main account, move it over here. So for insurance purposes, um, your checking account is covered, I think, for like 250 grand or something. I think these exchange accounts are insured up to 500,000 or something. And so I probably just need to rebalance. But a joint account is covered separately. So if you've got a 500,000 in a joint account, and you've got 500,000 in an individual account, they would each be covered. But if you've got like $100,000 in one account and $1 million in the other one, then if the shit hit the fan, I guess they would only cover the one account up to 500,000, and you'd lose the other 500,000 bucks. So if you can get multiple types of accounts. So IRA is a different type of account, joint account is different, individual is different. But if you have 5 different individual accounts with the same exchange, you're not going to be covered on each individual one. You're going to have to combine the totals for all of those. But yeah, I may stop showing the trades in the joint account. My old lady's a little more private than I am. But the cool part is I was able to convince her, I don't know, this time last year to borrow 21,000, or it was like $25,000 off of her job's IRA, and basically turned it into like 80 or 90,000. And she's probably gonna quit. um, and so we're gonna have to I'm gonna have to sell. I have to go ahead and do that now. I need to sell $21,000 worth of positions. We'll pay off that loan, and then we'll move her, whatever it is, 401k or whatever the hell, over to another IRA. But you have to pay off that loan. But it was definitely money well borrowed, because basically got a 4x return in a year. Uh, and who knows what shit returns she got in that IRA, because it's not self-directed. So it was probably just in some fucking mutual fund. All right, so I got to come up with 20 grand worth of profits here, which would be about 50 shares. So that works out pretty freaking perfectly, doesn't it? I won't have to touch any of my other positions. How much is it going to get me? Almost 20. All right, so how many shares do I have? 51. All right, I got to scrape up another 2 grand. Kind of want to keep all my Tesla. Oh, but I might be able to roll some covered calls. Okay, so now if I roll this, it's going to cost me $3,000 unless I sell this one. All right, let's see what I can do. I have to sell this for a loss. So let's do the poor man's covered call first. You got to be careful with these, because with shares you can sell a strike any which way you want. But with a poor man's covered call, you probably want to ballpark adding the current value to the strike. That'll get you in a fairly safe range. So I'm just going to add 90 to 380, gets me to 470, which is pretty close to the current price. So if I just roll this out to 45 for a $500 credit, I could get a little bit more aggressive with it if I wanted and go to the expected move. That would get me very close to the money I need. No insta fill, so I'm just going to walk this down for a slightly smaller credit. There we go. 20 and 7. Yeah, that's pretty close to the money that I need. Let's group these back up. And let's roll this one out for a small credit as well. That should get me all the cash I need to pay off the loan. All right, cool. Loans paid. Net theta is slightly positive, so technically I'm making money every day in this account instead of losing it, like in my other account. Um, but now that I got rid of those shares, I'm probably pretty heavily leveraged now. I've got the 100 shares, and then I've just got a bunch of these long calls. I've got oh, for a second I thought I sold 2 poor man's covered calls against one position, but it's really versus the shares, so that's fine. And I think in this account, I'm just going to you know what? I don't need to be that bullish on Tesla right now. So let me go ahead and just roll this. To the expected move, and I'll peel off the I didn't need to actually sell those other, roll those other covered calls apparently, because I'm going to close this one, take some profits here. That's going to give me a little bit more gravy. So I didn't need to peel off a couple of the other positions. $2 grand in cash. That means I can buy 2 of these. I can add 2 1080 positions. Is that what I want to do? Why not? Trying to get fills here. Still didn't fill. Am I chasing the price? There we go. Okay. All right, now I'm back to where I started. But now I have negative theta. I just couldn't help myself. All right. This is basically just my allowance. Put my spending money in here. Oh, my Tesla fired. So I had put credit spreads in Tesla, and it looks like that closed. So I sold them for like 230 and bought them back for 115. And since I set that as a limit order, it actually happened while I was on vacation. So that's kind of cool. So I know I want to take that little bit of buying power, and I'm just going to put this back on. Probably. Let's put Tesla back on. I can go out to 45 days to expiration. I'm going to go to the pretty close to the expected move. Let's just do the 300, 290. And I basically use the Kelly criterion formula here, which is the gambler's formula, to determine number one, whether they should enter into a bet or not, right? Whether it has positive, uh, positive value to an extent. And anytime you're in the casino, the house has an advantage, but the Kelly criterion you can use to make sure that if you keep your bet size appropriately small enough, you should never really go broke, or you can you can make sure that you have enough fun and don't go broke too quick. So let's just assume that this delta is accurate. Um, I'm not sure how they come to the in the money percent chance, but it's close, but not really that close to delta. So I'm just going to assume that delta is correct. On a $10 wide spread, I just take the $1,000 times the point 0.2, and if I'm getting paid more than $200, since this is a 20 delta, then selling this put credit spread at least makes sense as far as the Kelly criterion is concerned. If I was only able to collect, 199 or less, if the delta is correct in that I should win this bet approximately, you know, 80 times out of 100 and lose this bet 20 times out of 100, I got to collect at least the delta times the width of the spread. And fortunately enough, that's 235. So this actually makes sense. I'm willing to do this again. And let's see if I can get a fill. Okay, that went through. All right, and so now I'm going to do the exact same. Where is it? Okay, so I'm going to have to refresh. For some reason. No, it still didn't. Let's reload. There we go. All right, so now my Tesla position is available. And I'm going to go ahead and close it. Whoops. Close it at 50% profit. So it's automatically going to calculate it for me. Since I sold it for like whatever the hell I sold it for. Oh, I'm sorry, I sold it for 230 each, but I did two of them. So yeah, I'm trying to. Is that right? Oh, look at my activity. Yeah, I sold it for 235 times 2, so I should be buying this back for like 117. So I'll make sure percent profit. Yeah, 117. Double 117 is 234. Okay, yeah. Did I put it as good till close or till today? Good till close. Okay, cool. So that should fire automatically if that ever hits. And let's see what my strategy positions are. All right, I've got the one covered call that's been on for 11 days. It's not quite under 50%, so maybe I'll hold on to it. I won't be in a rush. And just to go back to that real quick. So I've got $700 left to collect in 30 days, but I've already collected 600 in 11 days. So I think I just talked myself into rolling this. Back out to 45. It's going to give me another 600 to play with. I'm basically saying that the 2 grand for the each credit spread is in this calculation as well. So what can I get with 600 bucks? Not much. I can go ahead and get one of these. I can add another September, I suppose. That'll work. Now I'll move on. All right, here's the challenge account. So this is the account that I'm trading against the covered call ETFs. I put this on 45 days expiration, so I wouldn't have to look at it while I was on vacation. I got rid of all of my poor man's covered calls. Now, if we were still trading at 360-ish, I would have probably sold some shares and added some more leverage in here. But for now, I guess I'll just roll these out. Hmm. Yeah, let's do it. No fill? All right, so unfortunately, I'm I'm barely collecting any theta here. So as much as I would like to take the 3 grand that I just got and buy some more long calls with, I think I need to just go ahead and buy. How many shares can I get with 3,000? Maybe 7. Nope, I can get one more. That's gonna get me so close to another 100 shares. 584. I need 16 shares. So I need about 6 grand. I could peel off some of these long calls and get there. And then I'd be able to sell another covered call. What would that get me? 7 grand? All right. I'll hold off. Hmm. Yep. We'll wait for strategy to pump, and then maybe I'll make some money on these. All right, let's check the chats, and then I'll hit the 5K account real quick. What's up, Pikachu? Thoughts on CEP? I sold some puts as a chicken move. I I think I looked at them. I don't think the premiums were terrible, but I don't remember how liquid they are either. Oh, that's why I didn't. They don't have weeklies. So let's just say I was gonna sell. Yeah, there's just not a lot of volume here. Bid-ask spread is kinda wide. These would be annoying for me to have to deal with. But yeah, I mean, I'm sure the premiums are reasonable. Let's just say I was gonna sell the 30. So if I collected $75 every 2 weeks, that would be 37.50 a week, which is not quite 1% returns a week. But yeah, I mean, they're not terrible, but um, liquidity can be a kind of a pain in the ass if it's difficult to get in and out of these trades. There's only 355 open interest, small volume. Let's see. Also, I'll talk up, but check CRWV, Core Weave. Oh, wow. Okay. They're new since April. That's crazy. So let's see. 1% return on capital would be $1.40. So this is like 6 times that. So like a 6% return in 3 days. 3% return on cap or 6% return on capital in 3 days. It's pretty ridiculous. Volume is up there, not much open interest. Bid-ask spread is pretty tight on a stock that's $145 a share. This is pretty good, but what the hell is this even? Cloud company, AI. Yeah, so do they own any Bitcoin? They'd probably be hands off for me otherwise, but um yeah, who knows when they'll hit resistance, right? I mean, they could a lot of times when these things hit resistance, they consolidate like 50% at least. So if this is the top, we're looking at $75 a share. Even if I went out here, what can I get it? Yeah, you can't get much out that far. This would be pretty safe. But yeah, I mean, if you don't mind owning these shares at this price, I mean, plowing into cash secured puts, um, the premiums are pretty high. Or if you already owned 100 shares of this, selling a covered call would get you like 5% returns in 3 days. It's pretty sweet. Dude face, thanks for the stream. We keep rolling. Nothing to complain about there. New preferred is a bit on the spectrum compared to the other two options. Good one. Let's see. They rent NVIDIA GPU-based units to Mag 7 and almost monopoly. Oh, no shit. Okay. Yeah, I mean, back in the days when I was just basically just the only thing I cared about was premium, I would absolutely take a position with premiums that high, but those days are over. All right, so I got 2,000 in cash, but I've got 2,000 wrapped up in options collateral, so I don't need to take any new positions here. These expire on the weekend. These are the ones that I'm copy trading with my brother-in-law, so I will do those offline, but they look like they're ready to roll. So the Riot 6.5 put, sold them for 15. Yeah, anywhere under 7, these are ready to roll. So I'm gonna have to get with him and make sure that we start collecting some more theta here on those 3 positions. The 425 call, I think I sold this for like 2 grand. So this might be ready to roll. Let's take a look. Before it went up 40% today, it would have been ready to roll. Yeah, I sold it for 1900. So maybe I'll just hold on to this. This has got 30 days left on it. I could roll it out for a small credit. Wait, the 425 strike? I might have been too aggressive with that. So, no, it's fine. I've got the 250 strike. And so for a poor man's covered call, if I add these two together, that gets me to 405. So as long as I'm selling the 405 or higher, I should be pretty safe with this. So this is fine. But let's see, did I get assigned any shares? I got 300 shares of CLSK and 100 of Riot. I got 3 covered calls on CLSK and 1 of Riot. So everything is covered. Looks like everything is good to go. Good to go here. Nothing, no moves to make. So, all right, looks like we're all caught up on the chats and we're all caught up on the trades. So